All right, guys. Here's Camo. We got Tobias here. We're just making a little video for you guys, going over some Monday and Friday analysis to help you read the markets better during the week, especially on first day of the week, Monday, and then to end the week on Friday. Usually, what we like to think is every day during an open, it's usually retail traders and small day traders like us, and then towards the end of the day, big banks, institutions, and all that, they close the day. So it's kind of the same with the week on like a macro scale. Of Monday is usually big days, and then of course Friday ends it with a banger. Here you can see we have over 2,400 trading days that Tobias um, gathered some data for, and then as you can see, this Mondays and Fridays. All this data is true real-time data that we took the time to gather. So hope everybody enjoys it. So let's go. Let's get right into it. We're going to start with Monday. Monday, here we go. Like I said, this is all data from 2020 using real ADR distributions. This is all real-time data. So for Mondays, usually what we like to see is these three setups happen. Of course, there are other patterns and trends that happen on Mondays, but we'll be focusing on these three because it's the ones that occur the most. At the Friday to Monday gap continuation, it's kind of just what it is. Friday goes up, Monday is going to continue going up. Friday goes down, Monday is going to continue to go down. Also, this is all just for NQ. It could be maybe relatable to the YM or the ES, but for now, this is focusing on the NQ. And then we also have the second one, opening range expansion. That's just, New York Open, 9:30, boom, that first hour, people trying to get in, get out, get their money, especially long-term swing traders. Monday morning, they're trying to put in their position for the week. And then, of course, number three, just overnight range sweep, liquidity grab, whatever happens during Asia Open Sunday evening, leading into overnight until London, it's just sweeping all the whole range. Tobias, anything to add before we go to the next slide?
I think we're good to go.
So this is the one that I tend to see a lot. I know other traders see this too. It's probably the most popular one. It is the highest probability behavior, which on the next couple slides, you'll see the actual probability that we calculated. This will be the highest one. The most common too, Asia Open. It's going to open, there's probably going to be a gap, but let's say Friday, it's bullish, it's going up, or it's going down. That following Monday, it's going to continue the trend. And what you're going to want to do is look for small pullbacks to get in for the trending day. Monday, statistically, is the strongest bullish day of the week. That's a really, really big statistic right here. It is the strongest bullish day of the week historically, not even for the NQ, but just futures in general. This, the second one, power move day. Really just focusing on that first hour, 9:30 open, from 9:30 to 10:30, that first hour. So much volume is traded during that time. Really just momentum driven. Price looks for highs, lows, and tries to capture these highs and lows to create a support level or resistance level for the day and possibly for the week. We wanted to add this in here too. No pullback days. It's just going to keep running. That's what this is. And then the third one, which I know Tobias is big on ICT. This has strong statistical backing, which we'll get into in the next couple slides. But it's just real simple. Price sweeps Asia highs and lows, and then reverses towards the VWAP and does its thing. So here, 64 to 72% probability of this happening. This is just probability percents of the three Monday models that I just went through. As you can see, the highest one, the first one, bullish Mondays, gap continuation. So yeah, on Mondays, if you keep these three in mind, if you're looking for key trends, just keep these in mind. Like I said, Friday's bullish and it closes above the London high, expect it to be bullish on Monday, and vice versa. If it breaks the London low, New York low, expect that to continue on Monday. What really drives Monday's price? Of course, weekend news, global economics. As of right now, recording this, we have the whole Iran war going on. Also, people positioning themselves for options, and then of course, it's huge for the NQ tech stocks, futures, Nvidia, Apple, Google, all those big time tech companies. They definitely can trigger the futures market and cause big gaps that occur Sunday evening for Asia Open. See, the average range for a Monday is 200 to 300 to 380 points, almost 200 to 400 points. It's a huge range on average that Mondays sweep. Which, if you position yourself right early enough or catch a good enough pullback, you're more than likely you'll be able to capture all of this, half of this, or even a quarter of this.
All right, so I'm going to talk over, talk over a quick example that we got here. This first part, this is showing you guys Friday, January 5th. It's kind of just setting the stage for the Friday, Monday continuation idea. So you can see when Friday opened, it was about dead center of the weekly range. And then right at the New York Open, it dropped and covered 35% of the range. Dropped all the way to the bottom third from the middle. After that, it went full bullish, and we were heading towards the nearest weekly high. We didn't get there on Friday, but we still covered 60% of the entire range. And so that shows how we were talking about a lot of the liquidity comes on Monday and Fridays, and that's from institutions. We had a massive pump that covered over half of the entire week's range in just a few hours on Friday. So let's go to the next slide. So on Monday, this can be really helpful to us. So we were nearing a weekly high on Monday, but we didn't reach it. So that leaves a super obvious bias for us when we wake up Monday morning. So what do? We wake up, we look for the nearest high or low on the daily or weekly chart, and we have last week's high as well as Thursday's high left over. So at the New York Open, we dropped down a little bit. This is the fake out. You'll see this is a bit of a trend, and this tends to happen. It's just liquidity building at the open. That's why we commonly avoid the first few minutes. And then after that, the bulls just take over, and the price is straight up the rest of the day. It heads right for that weekly high that the Friday run had started, and then quickly reverses, as you can see, and then we just consolidate the rest of the day. So you can see that was really the draw for almost the entire Monday session. And I like this example a lot because you can see after Monday, the rest of the week was bearish. So we didn't even need to get the weekly bias right for this Friday Monday continuation play.
Yeah, man, after I hit that weekly high, I just wanted to capture it. The market movers wanted to say, hey, we hit this level, cool, check mark, and then the bears came in.
Yep.
Cool. So here we got Fridays. Fridays, personally my favorite trading day. I know a lot of people are scared to trade Fridays. Specifically is because this right here, clearing the board. I like to tell people this a lot when it comes to Fridays. When you open your charts for Friday, even Thursday night for Asia Open, I'll always mark highs and lows, opens and closes, daily highs and lows, weekly highs and lows, opens and closes. I mark all that from the whole week, that prior week, maybe even the previous Friday, but definitely that whole week. I mark all of these levels and just let price do its thing. What I'm looking for is what hasn't been hit the entire week. Friday's right here, Friday's last chance to run liquidity for the whole week. So people are, institutions, they're trying to clear the liquidity volume before the weekend. Of course, you got options expiring, resolving, and here we like to call it the Friday raid. This is some really good stuff right here. What you want to do is, like I just said here, you want to ask what hasn't been taken this week. That's going to be your target. These levels are here. You want to mark weekly highs and lows, daily highs and lows, opens and closes, Asia highs and lows, London highs and lows. And just ask what hasn't been taken yet, and just watch for price to slowly inch towards these levels. Of course, you want to read the price action, make sure you get on a pullback, not a fake out. You don't want to predict what's going to happen. You just want to react. Let price do what it does. Sit back, be patient, and let the levels come to you. Don't try to chase the levels. Once the train's gone, it's gone. Just wait for the next train that comes to the station. And of course, Friday, I know it's kind of hard to see down here, but Fridays, count killers. You don't want to overtrade Fridays. If you do tend to be a overtrader, the one day you do not want to overtrade is Fridays. Because of this, price is going to be volatile. It's usually not going to range. It's going to hit a high, then reverse, hit a low, then reverse, hit an open, reverse, hit a close. So overtrading on Fridays, you want to try to get one or two good ones in. If not, call it a day and start your weekend early. this is some really good statistics here. Me personally, I think the last bunch of Fridays, every Friday, this is true to the core for me. At the open, let it break out. You can see here 90% of the days, New York takes either side, and you're almost guaranteed for it to happen. Of course, 97%, not 100, it's not guaranteed, but using this data that we've gathered, this is what we can tell you. Definitely Asia high, London high, or low will be hit every Friday. As you can see here, this is a big one for me too, not just because it's a little bit more on the percent, but I always see this happen, especially leading into the weekend. Whichever one, London high or the London low breaks, if price moves to that low or the high, it's more than likely going to break. And when I say break, I mean run. Just keep running. Of course, you don't want to get stuck in a liquidity zone and get taken out. That's what Fridays are. They're just trying to sweep the whole week. In one day, Friday, in a couple hours actually, it can sweep the entire week in hours. So if you look at like a weekly candle for the current week you're on, expect that Friday to go all the way up to the high, go all the way to the low, go back up, go down. So you definitely want to be locked in. These are just the percents here for all the different strategies, things that can happen on a Friday. These two, of course, at the top are my favorite, obviously, because they work for me. You can see the percent that backs this probability. Sometimes we do see highs and lows both being hit, which is right here, but more than likely you almost guaranteed that either a high or low will be tested. And if you get both low and high tested, and you can catch it, that's even better because it's a good trading day. This is a solid foundation for Fridays. Choosing which side is going to get taken, reading the market, saying, all right, we got the high 50 points away, we got the low 200 points away. More than likely, that high will get hit first. And we got another example right here.
Cool. So this is Friday, January 16th, and Monday here on the same slides. So first we'll lay the ground floor by talking about Friday. So Friday once again covered much of the weekly range in a single candle. It tried to sweep the floor basically, as Ken was talking about. We were bullish into Asia, London until the New York AM session where we dumped hard. We didn't sweep any highs or daily highs or lows on Friday. We did sweep London lows like we were looking for. And we overlapped 50% of the entire weekly range in just a few hours again. And so it started nice. Yeah, several hundred handles, and that's where that 200 to 400, almost 400 average true range of Friday comes into play. And so after a huge bear run on Friday, where does that leave us on Monday? Obviously, it leaves us looking for a sweep of the low, and the nearest low on the daily chart when we wake up Monday is going to be Friday's low and the previous week's low, which looks like it was a Wednesday.
Yeah, that 50% of the week range in one day on a Friday is insane. But it happens, and it happens a lot.
Yeah, and especially these days, I mean, with how volatile things have been, institutions or big money isn't wanting to hold positions overnight at all. We'll really see Fridays make some of those huge runs for several hundred handles and sweep some nearby daily highs and lows.
Another Monday example.
Yep, so this is Monday, January 12th. You can see I have Friday marked. And Friday is black in this example, which is a bear day. So when we wake up Monday morning after a bearish day like that, where we neared the previous week's lows, but we didn't sweep it, again, that leaves us with a super obvious bias for the day. We want to see a nearby London high or low tested, and then we want to run for that daily low that Friday started the run for. You can clearly see that Friday was bearish, and then Monday was just overly bearish. I mean, it swept 2 weeks of lows there and just completely dumped. So again, that's where that almost averaging 400 handles a week on a Monday and a Friday can come into play. And you can catch some really massive plays on Mondays and Fridays. That's where a lot of the daily chart and the weekly action is coming into play.
And like going back to the first couple of slides of the gap continuation, this is the Friday, ended bearish. Come Monday, it's going to continue that bear trend. Like I said, swept all this right here, create this new low, and of course Tuesday and on to the rest of the week, Tuesday, Wednesday, Thursday, Friday, and Friday ended up coming back above the previous Friday high.
So once again, for the Friday to Monday continuation play, you don't even need the weekly bias to be right. It's almost guaranteed that Monday is going to be a continuation of the previous Friday's run.
Yep. So yeah, here if you're trading the NQ, which can be relatable to the YM and the ES, this is what you want to look for Mondays. You want to target these big runners, just like institutions are. If you're looking on a macro level, institutions are putting in their orders for the week on Mondays because they're expecting huge runs for the week. So if on a micro level, us as day traders, if we can follow them and even just catch these 150, 300 point runners, that's insane. That's great. Monday, like we just talked about, Tobias said, however, Friday trends, expect that to be the same on Monday. At the beginning of the open, it might fake out and it might reverse, and you might be like, oh, this is not the case. But if you just let it Yo, you hear me? Yo, you hear me?
Yeah, I hear you now. I think we.
Or my bad,
lost each other for a second there.
my laptop died. It's still recording though. We're good.
Oh, no.
I'll pick it up from. I'll edit this in Canvas so you wouldn't be able to tell. So yeah, I'm just gonna pick this back up. Yeah, Mondays you want to look at the trend from that previous Friday, and of course on Mondays a lot of people don't like to hold for that long, but you could potentially, if you have a good enough entry point, you can hold your position all day, whether you like to trail, stay break even with one contract. You can potentially have a good enough entry to where it's a one and done kind of trade, and you're going to exit at 4 o'clock. And of course, Fridays, you really just want to blatantly just take your profits quick, since there's so much range going on between capturing highs, lows, ups and downs, opens to closes. It's a good day for scalpers because you're going to go, you have some bullish action, you're going to have some bearish action, but you definitely want to take your profits quicker than you usually would throughout the rest of the week. Of course, here, expect a lot of reversals on Friday. Here we just have some stats for Monday. As you can see, the highest percent here, 200 to 300 points, which to me is very on point. Sometimes I grab 200, 230 points on a Monday. So this is very relatable to me. Almost rarely you can see 500 points, and if you do, you probably had an insane entry. Let's go to the next one. Fridays, about the same, 200-300 points is the highest on average, 268. And of course, this is the key takeaway right here. Fridays are more two-sided liquidity driven, meaning highs and lows are being hit open to closes. I think this is one of the last examples we have.
So this is Friday, February 6th into Monday, February 9th, which is a little bit more recent. So this example shows how when Friday does hit a nearby weekly or daily level, that doesn't change what we're doing on Monday. It might make our target a little bit harder if we don't have another nearby daily high or weekly low, but we're still looking for that same continuation that we usually would be. So let's get into this example a little bit. Friday was bullish, straight into the nearest daily high, which happened to just be Thursday's high. After reaching Thursday's high, we kind of slowed down and consolidated the rest of the session. So on Monday, what are we doing? We're looking for a continuation Friday, just like always. So we're looking for Monday to be bullish. Since we did hit a daily high or low on Friday, it's not guaranteed that Monday is going to run for a weekly or daily high or low. So I like to usually target the nearest by liquidity level. And so you can see we have a gap in price that's pretty close by, as well as a high near that gap. So in that area is a great place to target on Monday morning. And you can see that we get a run straight into that gap. And then quickly the next day we end up taking that high.
Yeah, I definitely like this example here. It's just clean trend that we're talking about. Tobias said here we got Friday, range, grab some lows, grab the high, and then the following Monday, you can see it just shot up, which was Friday bullish, so Monday bullish.
You can really see how huge that Friday was. I mean, swept of the previous day's high and low, like you said. I mean, that's one of those Fridays that gives you the opportunity to catch those 200 or 300 handles.
And I think, is this the last slide?
Yep.
Cool, yeah. Appreciate your time, T. And I hope everybody enjoys this video and can really get something out of it. I hope you guys look forward to your next Friday, your next Monday. Signing off.
Thanks for watching, guys.